All right, then. We are live on Blockchain Mastery Podcast. My name is Titilayo Oyinsan. It's a pleasure once again to be live with you. And thank you so much for tuning in. A lot of things are happening in the world of blockchain technology. There are a lot of opportunities and possibilities for the future. And today is going to be another interesting conversation. We're talking decentralized exchanges and the advantages over their centralized counterparts. Now, if those words seem a little large for you presently, not to worry, we're going to break everything down as much as we can. I'm trying to confirm we are live on Instagram presently. Just one more line of confirmation. Aha. Okay. All right. So let's begin. Now, some overview of the topic here: centralized exchanges or CEXs. They've dominated the crypto market for years. They offer user friendly interfaces, high liquidity, a robust customer support. However, they also come with significant drawbacks, such as susceptibility to hacking, lack of transparency, the need for users to trust third parties with their funds. Whenever we're talking about money here, some people find it comforting to know that someone else is overseeing, the security of their funds. By leveraging blockchain technology, DEXs, that's decentralized exchanges, they've enabled direct transactions between users, eliminating the need for intermediaries. This not only enhances security, but also ensures greater transparency and user control over the funds. Joining us today is Jesse Croffie. He is a product development management expert, and he's also a startup operator. He's skilled at driving strategic growth and leading highly technical teams at fast growth fintech startup. Now, when it comes to developing and scaling, he's been doing that, scaling digital financial products across Africa and beyond. And presently, he is product lead at a budding fintech startup that is present in more than a few African countries, including Nigeria. Thank you so much, Jesse, for joining us today. Thanks for taking out time from your busy schedule to be part of the Blockchain Mastery podcast. Welcome to the show.
Hello, Titi. Thank you very much. That was a very wonderful intro.
Oh,
Yeah.
wow. Okay. I just gave a little bit of an overview. You are one of the experts in this particular field. And well, at this point, uh, there's still so much to learn. There's still so many questions that people are asking, and they're not getting the answers they need, which is why we have conversations like this. Thanks for joining us.
Thank you for having me.
So, just so people are aware, just give a little bit of an overview of how you got involved in blockchain tech, and give a little bit of insight into what you believe decentralized exchanges represent.
Okay. Once again, thank you for having me on the podcast. My name is Croffie Jesse once again. I would say curiosity. Yeah, I think that's the one word I would actually just use to admit why I actually got interested in blockchain in the first place. So, um, over the years, coming back way back 2012, 2013, I actually got first-hand exposed to software engineering as a how would I put it, as a potential career. So I started my university education. I started off as a software engineer, and somehow, due to many factors, including parental factors, I still tried to become a doctor. Which eventually this still did not happen. And after graduation, I studied microbiology, by the way. So after graduation, I found myself once again into the whole tech ecosystem. And I've always been curious about financial technology. I've also always been curious about the financial industry as a whole. Why does we hear money makes the world go around? Yeah. Well, why does money actually make the world go around? And I think that's what sparked my curiosity. And
Mm.
over the years, I got my hands dirty. I actually did not start my professional career in technology or fintech, so to speak. I started somewhere in between oil and gas and
Oh,
safety,
wow.
and
Wow.
then I don't know. You just get to that point where you know that this is not what I'm supposed to be doing here.
Many people have reached that point before, and
Exactly.
then they did a U-turn. But it's a brave thing. It's a brave thing. You have to have a certain level of risk tolerance to change careers somewhere down the line, especially into an area that was sort of untapped as
Yes.
at that time, right?
Yeah, it was tough. It was tough because here you are in an industry that has shown over the years, over the decades, that has immense promise, and then you are saying, "No, come on, I want to go and test untested waters," so to
Mm,
speak. And at the end of the year, I think that was 2022, 2021, I resigned
oh,
with no prospect in sight, by the way.
wow.
I just took that leap of faith. I resigned. During the year, during 2021, I'd actually already started taking courses and certifications in product management. I'd actually started taking like deep dive courses into corporate finance. And I was just so intrigued about it. And down the line, I got to meet who would happen to now become the current co-founder of one of the startups I currently work with,
Okay.
and it was first friendship. They had launched a fintech startup, by the way, and
Mm,
my friend who actually knew the co-founder told me, "Oh, Jesse, there's this fantastic product about to launch." In fact, he even sent me the test version. That's like the pre-MVP version, by the way. And I tested it, and I was like, "Oh, this is cool! Like it has so much promise, like so much potential." And when they launched, I remember I used to always follow him, like just now, be there for your guy, spread the word, and before you know it, the CEO reached out to me and asked if I would like to come on board as the product manager, because before then they did not have a product manager, and that was how this journey started. And but however, my journey into Web3 started way before then.
I was
I
actually going to ask about that. I was going to
Yeah,
ask about that because it feels like you had experience on both sides of the divide. That's the centralized side and the decentralized side. So that is fintech startups and probably more common modern banking,
yes,
as and of course decentralized Web3 opportunities as well. So
true.
that's where I was going now. I would love it if we break down what exactly decentralized exchanges entities actually represent.
Okay. Um, in layman terms, yeah, let's just try to keep it as simple as possible. Uh, Decentralized exchanges are what they are, decentralized. So there is no entity, there is no body, there is no governance in the terms of corporate governance. Like there's this entity that is regulating this body, just like the way you have central banks of countries, or probably even a bank who you bank with. For decentralized exchanges, these are peer-to-peer transactions that happen on the blockchain ledger. Yeah.
Mhm.
So I have an asset or a crypto asset or a digital asset, and I want to trade it either for a digital, if another digital asset, basically. And so you have something I need, I have something you need, and we swap on a
Okay.
swap or the decentralized exchange as we have it, without any intermediary.
Mm.
Normally, if I want to send you money fiat,
Okay.
you would have to have a bank account. Yeah, I would have to have a bank account. And our bank accounts are being held by a bank, an entity. For decentralized exchange, I don't need to have a bank account. I don't need to know an entity that has a bank account. All I
Okay.
just need to have is your decentralized address, which we call a wallet address. All I need is my own decentralized address, which I call a wallet address, and we swap,
Mm.
and the deal happens, and
But
everybody.
you have to agree that the most common question when we discuss this is, isn't that exchange run by someone? Isn't that exchange a company? Doesn't someone run it, manage it, maintain it, ensure that it's running smoothly? How is that not considered an entity?
Okay, so the whole principle of blockchain here, by who would call the pioneer, the creator of Bitcoin, who goes by the pseudonym Satoshi, yeah, was to have a network of computers, yeah, solve mathematical equations, and whichever whichever computer on that network gets the mathematical equation correctly means the Bitcoin in that case, which was Bitcoin. And a similar approach also applies to what we now have today as decentralized exchanges. Yeah, um, it is created open source. Yeah, so it's not like one person has the total authority or the total know-how to actually stop or let people in or stop people from using this thing. It's an open source platform where we exchange crypto assets, and everybody just go their way. It creates this level of transparency. It also, in it, and I know we're coming to talk about this, but it also gives its own form of security, which I believe we'll talk about later on.
Yeah, so security means different things to different people now, but since you are the expert and you understand the product itself, because it is a product, right? It is a product that is extremely popular right now, and understanding how businesses are taking advantage, or should I say exploiting or taking advantage of the opportunities the technology gives us, is another ball game entirely. So let's do the compare and contrast now. We've already talked about the fact that decentralized exchanges they don't represent entities, right? And centralized exchanges represent entities such as banks or financial managers. But are there any other compare and contrast you can give us that are differences when it comes to managing of finance?
Okay, so again, another major difference. Okay, I think we've spoken about the fact that decentralized exchanges are not necessarily controlled by a singular entity. I think that should have even been the better word, just for sake of clarity, so to speak. Yeah. So um, decentralized exchanges are not controlled by a singular entity. But another thing decentralized exchanges also um, help us with is regulation and compliance. Yeah. Um, we've been in a country where probably people at the top or people in leadership really either they have a bad good feeling about the technology or the use of a technology, or they really don't just understand it. And because they don't understand it, we just have to ban it. Yeah, we've seen that play over and over again. And
It
that was
happened a few times, yes, it has.
exactly. And I did not mention any country in particular. So, but
There are quite a few countries who are on that particular, school of
exactly.
thought. Mm.
Exactly, and it has happened over and over. We've seen it play out, even close to us. Yeah, some of us have actually felt the brunt of it here. Uh, but that is something you don't find on decentralized exchanges
Okay.
because there is nobody to hold. Yeah, you cannot come and hold Jesse. Jesse cannot go and hold Titi that, please, that your company, shut it down. Nobody owns the exchange. Nobody owns the company. And so it also helps you in a good way, because I know people also use it in a bad way, but in a good
Of
way,
course.
it helps you relax the burden of regulatory pressure, unnecessary or lengthy compliance or due process. Like things just happen at a snap. There is no need for KYC, know your customer. Everybody knows everybody, and nobody knows anybody. Yeah,
Mm.
so that's
So
just the
you
concept.
said initially when we started talking, you said that this is added security. So
Yes.
that it feels like a double-edged sword, when you call it secure, whereas you're not really holding anybody accountable.
Yeah. So it's secure in the sense that, number one, because nobody in particular owns this entity, it means if I'm a bad actor playing in the space, I'm a hacker or somebody with ill intentions, where or who do I actually go to hack? What do I actually hack? Yeah.
Wow.
Let's remember the blockchain principle is that a network of computers are all trying to replicate and at real time having the same sequences being replicated across probably thousands of computers. So it means that even if I want to play funny and I probably want to delete data from this computer, how do I delete the data from the other thousands of computers? Yeah. If I want to hack into the computer in this network, how do I, because at the end of the day, everything is tied. Yeah, it's blockchain. Yeah, it's tied. So I I really cannot. So that's what makes decentralized exchanges actually more secure, because for a centralized exchange, all I need to know is know that this is Jesse's exchange, and I just do what I need to do, get into their system, do it, get away with the funds, and I'm out.
Okay. All right. So I love the way you've broken it down. You put it in as layman's terms as possible, and well done for doing that. In fact,
Thank you very much.
I think we've given a little spotlight on, why there's an advantage to using decentralized exchanges. But the we've talked about the advantages, but now I want to talk about this issue of trading. So a lot of people are trading uh, currencies for currencies, the same way, in a sense, like a bureau de change has been functioning in airports all over the world. You have bureau de changes there. When you go to a particular country, you need their currency to function. If you want to use a particular um, you know network, or you want to use a particular, or you want to do something specific, and there is a decentralized currency that is working in that space, you have to exchange the currency you have for that currency. Now, trading becomes, it's a fine line, they say, between trading and gambling.
True.
Very fine line. But it has become a very lucrative source of income for a lot of people who are exploiting, taking advantage of the fluctuating movements of the market. People ask me all the time, what is influencing the movement of these markets? How do people guess, or I'm going to say guess, or estimate, or give projections towards where the markets are going to turn, based on the issue of Web3 moving things even further than just where blockchain began? Give a brief explanation of what you think.
Okay. So trading can feel like gambling when there is an insufficient knowledge base. Yeah. So if I don't know enough about something, I'm definitely going to be gambling if I actually decide to partake in that thing. So a lot of people would akin trading to probably sports betting, or because they'll tell you at the end of the day, you don't know what is going to happen. Yeah. Um, this project could do well, this project could nosedive, and you could make a lot of money and you could lose a lot of money. At the end of the day, it's the financial market. The same way you could lose a lot of money buying stocks, it's the same way you could also lose a lot of money trading on the Web3 ecosystem. The same way you can make a lot of money probably trading the fiat capital market, which is the foreign exchange market, Forex as we call it. It's the same way you could also make a lot of money trading Web3 and crypto assets. So at the end of the day, knowledge base is what separates a trader from a gambler. Yeah, there are a lot of principles which we might not even be able to cover on this podcast, but there are a lot of things a trader needs to know. The number one principle is know when to buy, know when to sell. Yeah, and
True.
again, you might say that, but that could also be gambling. But if you know when to buy because of because of the knowledge you already have on why this project or this asset has the potential to actually go higher than I bought it, you're a trader. If you have the know-how to know why this project is looking like it's going to nosedive, and this is the right time for me to sell. That's what makes you a trader. If you just wake up one morning and you just, there's one popular thing on the market, let me go and buy it.
Okay.
Yeah, there's a 50-50, there's a 90% chance you're going to lose your money. Let me not even say 50%. Yeah, because at the end of the day, there is something we always say in trading, or a lot of traders used to say, I won't call myself an expert trader. In fact, I believe I'm still learning a lot.
Okay.
Yeah. In fact, I don't even like to call myself a trader. I call myself a Web3 enthusiast. Yeah, because I still feel I still have a long way to go. But that is to tell you that there are levels to this thing. Yeah, there are, even for someone, I've been active in the Web3 space for 5 years now, if not more. Active, like I've known about Web3 way longer than that, but I've been active for over 5 years. But even at that, I still feel I'm still not there. Yeah, because you speak to people, you speak with people, and your knowledge just keeps getting better day in day out. When you interact with traders in the market who are moving volume, you really understand that I actually also have a long way to go in my trading journey. So certain principles needs to be understood by people who want to go into this thing and know when to buy, know when to sell, and know why you have to buy at this entry point, know why you have to sell at this either profit or loss point, understand risk management. You also need to tame your greed, which is why a lot of people lose money. Yeah, you need to tame your greed, understand risk management, never trade on your survival money. I think if
Hmm.
nobody will take anything out of this is just
Survival
what
money. I like that term.
never
Survival money.
never trade with your survival. When I mean survival money, money you used to pay bills or eat food or sort out basic necessities, your house rent. Don't use your house rent to, like, you don't know. Yeah, even after expert analysis, even when you so in trading we have what we call fundamental and technical analysis. Yeah. Fundamental analysis that are driven by news. Yeah. So something happened in a certain country, a president said something, a billionaire said something, a lot of things could affect why a trade would go one way or the other. And that is fundamental analysis. Technical analysis is your understanding of trading patterns. So what we call the trading chart.
Sure.
Why is when a chart shows a certain pattern, what does it mean? What does it not mean? Does it mean I should stay off the market? Does it mean there's an entry point? So again, I said if you don't have substantial knowledge, you'll just be gambling. And
Mm.
trust me, I can tell you because I've been at that point where I lost
Oh,
loads,
wow.
loads
Mm.
of money. You can be $10,000 rich today and
And
$0 broke tomorrow. It has happened to me, real life. So
sure.
yeah.
But I have to ask, what's the funniest story someone has told you about what they traded with? Like you mentioned house rent there, and I'm like, people use their house rent to trade, really?
A friend of mine has used his school fees. His school
Wow.
fees. It was a medical school at the time. uh,
Medical school.
yes, he was in medical
Yeah.
school at the time. I hope
Wow.
he sees this. We can laugh over it now, but
But
when
it
it
wasn't
happened,
funny then.
it was a really dire situation. So
Mm.
I think that was what first informed my thinking, even before I heard it anywhere. That please don't trade with your survival money. Always trade with what you can afford to lose. Yeah,
Sure.
and for different people, different levels.
Of
Some
course.
you could afford to lose $1,000. I
Like,
could not afford. I might not afford to be able. I would not be able to afford to lose $1,000. Yeah, another person could.
yeah.
Yeah, could afford $1,000,000, $100,000. Different people at different levels of wealth
Sure.
could have different meaning to what I can afford to lose. So
All right. I want to touch on the issue of smart contracts now. And
okay,
the reason for this is because, yes, we've talked about decentralized exchanges for what they do, essentially house addresses on the blockchain on your behalf, essentially, and we use them to exchange value. But now with smart contracts coming into play, meaning that it's about more than just financial management. Now it's about more than just financial exchange, especially with the advent of Web3. Let's talk about the opportunities that smart contracts are providing for people maybe who want to build a startup or maybe a fintech of their own, and where the market stands today.
So I think some of the benefits of smart contracts. I wouldn't tell myself an expert in the whole smart contracts landscape. I don't know. It's something I've really not just, will I say, taking time to digest. So I'm the type of person that I'll pick my hustle and run with it. Yeah, I'm not really out to scrape every little thing that's out there, because at the end of the day, that's what makes you greedy, and you just want to put your hand in every pot. Well, I think one of the things smart contracts actually helps people building to do is automation. Yeah. Of course, smart contracts can always be deployed automatically, as long as certain conditions have actually been met. And when you look at the way they actually work on decentralized exchange, I think one of the things smart contracts have really been able to do, it has been able to move reliance away from centralized authorities. Yeah, because here we all can come together, create value, and decimate value. Yeah, I'm trying as much as possible not to speak any technical jargon. Yeah. So at the end of the day, we different people, different blockchain networks, or even on a blockchain network, you can have several smart contracts deployed. Yeah, I think one of the popular smart contracts out there are the BSC, the Binance Smart Chain. You also have Ethereum. I think for senior traders, they always go the way of Ethereum smart contracts, because they feel that entry is quite,
It's premium.
hard. It's premium. Yeah, that's the
Premium.
word. So entry is premium, and so the possibilities that some somehow persons will just come in and want to do nonsense, it's really low. And so that's why people move the way of Ethereum, and we've seen a lot of successful projects deployed over time, the likes of Arbitrum and the rest and the rest and the rest of them. And then you have the Binance side, which is for the small guys like us. Yeah. But what is also does for the general public is that it gives people the opportunity to actually earn. I know people who their lives got turned around.
Sure.
Exactly, from a project that was deployed on a smart contract. Yeah. I have my own testimonies. I don't want to be kidnapped, but
of course, I understand. So, to be honest, there's a lot happening in that space. Many people just, some jumped on because they were just trying to figure the space out. They were just trying to learn something new, and they hit big. But then there are some who did not make it so big. But could we break down what a smart contract could mean for different industries, for instance? Let's say the term contract itself is a legal term, right?
Yeah.
For the legal space now, what could smart contracts essentially mean for that space, for instance?
That's a very interesting use case. So for the legal space, now I have to put my have a spectre hat on and start thinking how could we actually envisage smart contracts in the legal space. At the top of my head, I would say it could actually assist dispute resolution. The tenets of that, it's something probably maybe I'll still have to go and look into and know how that will actually happen in a real world.
Based on facts, because these facts were essentially stored on the blockchain. Is that what you mean?
Exactly. So dispute resolution in the sense that nobody's a liar, nobody is a seer. Yeah, the information is there. We can all access it. I have access to it, you have access to it, data does not lie.
Okay. Sure.
I don't know if I believe that or not,
Well,
but
data on blockchain should not lie.
data on the blockchain should not lie,
Yeah.
actually. So putting it in context, data
Yeah.
actually does not lie. So I think what that could also do is shorten the length, the duration it takes to probably get to a resolution, so to speak. Yeah. We're not depending on technicalities. I said that and I had a very green smile on my cheeks. I don't know why.
Technicalities are, they're not exactly simplified, but there's no heavy reading of contracts going back and forth. There's no fine print.
Exactly.
Okay.
So I don't know. When I said technicalities, so one thing came to my mind, but I'm
Okay.
sorry, I can't say that here.
So,
But
the
yeah,
fine
so
print is exposed, so to speak. You can't hide, hidden terms in the contract, like the way.
exactly.
Okay.
Thank you for simplifying that for me. So it takes away all those sneaky ways or those things that lawyers will tell you only lawyers can understand. Yeah. So I think it also simplifies the process for we, the non-legal actors, to also actually try to really understand what went on and how we actually arrived at this juncture.
All right then. Now, you won't believe how time has flown past right here on the Blockchain Mastery Podcast. We've been having an interesting conversation with Jesse Croffie. He is a product manager and product management mentor, and he has spoken to us briefly, concisely, but briefly on decentralized exchanges. Hopefully, we've been able to inspire you or enlighten you just a little bit more, give you a little bit more insight into this world of blockchain. Thank you so much for joining us. Please don't be a stranger, and we'll be talking sometime soon. Yes?
Of course, I'm always happy to do this again. Hopefully, we'll have more time
Yeah,
because I actually feel there's still a lot to talk about. But
there is. There is.
fine,
But bite sizes. 30 minutes of blockchain for some people is a lot.
a lot. Actually, a lot.
All right, then. Thank you, Jesse. I have some news update in the blockchain space I'm going to be sharing now. Thanks so much for joining us.
Thank you for having me.
For those of you who would like to find out maybe how you can be part of the Blockchain Mastery Podcast, it's very simple. All you have to do is send us an email, and that will be scrolling on your screen right now. That is Dynamite Podcast Network at gmail.com. Dynamite Podcast Network at gmail.com. Now, I did say I had some news. What is happening in blockchain space right now? Now, there is a blockchain developer warning of centralization risks as the crypto AI race intensifies. Yes, AI is such a big deal right now all over the world. And of course, blockchain builders, for many blockchain builders, it is a huge deal. And now, the announcement that $7.5 billion token merger uniting Fetch.ai, that's FET, and AGIX and Ocean Protocol communities into the artificial intelligence space. You know what? It's artificial super intelligence communities at this point that are being highlighted. Those are there's an ASI, it's an alliance now that's been the hallmark of increased interconnectedness between crypto and AI. Now, some people have lauded this merger as a milestone for decreased friction, improving synergies. Others have warned of the dangers of centralization. One expert, Cointelegraph, spoke to Julian Pei, CEO of Web3 AI base layer KIP protocol. They warn that we've seen a clear set of monopolies forming in AI in the past 2 years. A few companies like OpenAI are training their giant models on all of our collective data and knowledge, and also completely capturing the regulatory process. So Pei also said, we will own nothing in the AI-powered future should this trend continue. We are all presently victims of a great knowledge heist, and in future, we'll be relegated to being mere consumers of AI with no economic participation rights. Okay, it's getting deeper, but this is ironic. as the aforesaid giant models are trained on our data in the first place. Everyone needs to get back their ownership rights if they are to have a voice in the AI powered future. So essentially explaining that he first started KIP as a means of building decentralized AI infrastructure tools for blockchain developers. But to build an AI product ready for users, you need to link an AI model with an AI app, like a chatbot that transmits instructions from an end user to the model, depending on the nature of the product. An external data set can also be integrated into the setup. So it's an AI model linked to an AI app, augmented by a data set. So, what does this mean for the AI versus blockchain space? For a fair and competitive AI ecosystem, it means that models, apps, data sets, they are often not owned or developed by the same people or entities. We talked about decentralization earlier on, and that is the only way to keep things transparent. Essentially, transparent is the term. Nonetheless, there should be a platform where each individual developer can share the data and assemble all the components. Let's not go too technical, but let's just say there is super intelligence as a term. Now, we've already sort of overused AI. Now, there is super AI that we need to make sure we understand a bit more about. We're getting there. We're getting there. We're getting to learn a bit more about blockchain technology and the opportunities that it provides for us in our everyday use cases. And yeah, it's about us making sure that we take advantage and get on the train before the train leaves the station and leaves us behind. All right, then. Hopefully, you've had an interesting session with us on Blockchain Mastery Podcast today. We will, of course, be having another conversation very, very soon. Make sure you subscribe to this channel, hit the notification bell, follow, like, subscribe, all the jargon that makes sure that you will get the info when the next episode is coming your way. And of course, one more time, scrolling on your screen, if you would like to be the next guest on Blockchain Mastery Podcast, we would love to have you. Just send us an email. That's dynamitepodcastnetwork@gmail.com. My name once again is Titilayo Oyinsan. Thank you so much for joining us. Have a great day.